What is happening, everybody? Welcome back to another live stream. And did 2 live streams yesterday. That was a lot of fun. Happy to be back here this morning. Hopefully, everybody's doing fantastic out there. As you're coming in, make sure you hit that like button. That really helps us out. And let's dive in. A lot to get to. I want to talk about SHIB. I want to talk about Apollo Crypto. I want to talk about Terrarium. They've got a lot of things happening. BTFA just crossed over 7K. NFTs minted. We're going to talk about that, as well as just take a look at the overall crypto market, see if there's any top news we need to address as well. And good morning to everybody out there. Glad to have you back with us here this morning. If you're new, welcome in. Oregon, what's happening, man? Morning, y'all. How we doing? Steve, good morning. Rodney, good morning. Tracy, good morning. Hi, everyone. Portfolio all red this morning again, holding strong and not scared because I'm used to the stock market doing very similar things for years, waiting for the next bull run. Yeah, I mean, a lot of people have been calling this a bull trap, and it most likely is. Let's just call it what it is, right? Because nothing has changed. Nothing has fundamentally changed in our world. Inflation is still at a 4-decade high, right? The war is still going on. Nothing has changed there, right? We're still dealing with many concerns over crypto regulation. And if you don't want to call them concerns, it's really uncertainty, right? And there is, we've been saying this for months, that so many people, right, with capital are on the sidelines right now because there is not regulatory clarity. So that's a big deal with crypto. But mind you, it's not just crypto that has been, feeling the pain here in 2022. It's every market across the board. It's every market across the board, right? So, what the feds are going to do next, more uncertainty, right? So nothing has fundamentally changed. Now, with that being said, crypto's pretty wild, right? Expect the unexpected. That's for sure. I mean, don't rule anything out, right? Don't rule anything out. Did anyone expect Bitcoin to go to 69K last year? Probably not. That was probably not in the cards for a lot of people. I mean, the meteoric gains during a time of crisis, by the way, right? During a pandemic, crypto went absolutely parabolic. So don't rule anything out, but there are just a lot of factors right now working against us in the short term. But I say this all the time, and I'll say it again. If you're playing the long game here, 2022 thus far has just been one big opportunity. If you're playing the long game, it's been one big opportunity to accumulate your highest conviction cryptos, to accumulate your highest conviction stocks, to diversify your portfolio. This is where millionaires are made. I mean, it really is. These types of markets produce big gains down the road, right? Big gains down the road because the game is simple, right? Buy low, sell high. We say it all the time, but it's kind of a catchphrase. But in reality, anybody who was into Bitcoin already in 2020 and not chasing the green candlesticks, well, they were big winners. They were big winners in 2021, right? So I agree with you, Tracy. Holding strong right now, not scared because you're used to this. And, the volatility is a little bit crazier, obviously, in crypto, just a more volatile asset class. Looking like SHIB is going to drop back down below this 10 range today. Yeah, so we're going to start with SHIB. It's been an interesting ride here. We're hovering just above it right now. It's been an interesting ride. But overall, I am very pleased with where Shiba Inu is right now and what it's done here in a bear market, right? So we obviously lost a zero yesterday to get us back to 4 zeros. That happened while we were on stream yesterday in the morning. Then we gained it back last night. Right? So here it is right here. These are 1 minute candlesticks. So this was the run that started yesterday way down in here. Okay. Obviously, we ran all the way up to almost the 12 range. We just topped out at like the 11.99. And then we came back down. And then we came back down in the nines. So we gained that zero back last night, but then we lost it again here this morning. Now, right now we're, you know, barely above that 10 range. So we're going to continue to watch it here. That's the RSI down here in the bottom. This is volume here, this blue batch. Look at the increase in volume. I mean, even if we go out to 1 hour, this will give us a little deeper view here. Do we have our volume? There it is. Look at that spike in volume. That's interesting, right? This back in here in May, this was sell pressure. This was sell pressure. May 12th was the big collapse, right? The first big collapse, if you will. And then here, the last 24, 36 hours, look at that. That is buy pressure right there. Okay. Good morning, Zach. Hope you're having a great day. You too, Mark. Thanks so much for coming back in, man. Let's see here. Bobby says, SAPE. What's up, man? I'm hearing BTC is going back to around 10K. Yeah, a lot of people have been saying that, right? Nobody can say with certainty what Bitcoin's going to do. Doesn't matter who you're listening to. Nobody can say with certainty what Bitcoin is going to do, right? But a lot of people have said 10K is in the cards. Everybody has their opinions, right? My opinion is I think 15K could be the bottom. 15K could be the bottom, and around 650, 700 for Ethereum. So a lot of people are saying, there's going to be one more big major dump of crypto. Bitcoin's hovering still just above 20K right now. It's hanging in there, but it is dialing back a little bit. There are some things still in the green, like Uniswap is up. There you can see 13.5% waves. SHIB's only up 7%. When I did my video this morning, it was up 15%. I put a video out even before the live here, just after 8 o'clock. So it is dialed back a little bit, but still a really strong 48 hours thus far for SHIB. Excited about that. And then there's some other just ancillary cryptos barely in the green here, but Uniswap being up 13.5% is interesting. Uniswap back in the top 20 here, ranked number 18 right now. Right, but overall we're dialing back a little bit after a green day yesterday, sitting just under $900 billion global market cap right now. And if we look at this market cap over time, I was looking at this yesterday a little bit. What's up, Muzz? Good morning, man. Guys, hit that like button on your way in. That really helps us out. Jojo, good morning. So we look at the global crypto market cap here. Look at this run. I mean, people don't even realize what happened in 2021. I mean, this is insane. Look at this. I mean, absolutely crazy. So it was a $344 billion market cap, 344. This was late 2020. We went from not even 500 billion to a $3 trillion market cap, all in 2021. That was a huge run up, right? I mean, look at that. This is over time. I mean, this is dating back all the way back here, right? Is this the alt chart? There we go. There's the alt chart. I mean, crazy, right? Can you imagine back in here in 2015 and 2016? Look at that. Only a $3 billion market cap, $4 billion market cap overall, globally. Right? So we've come a long way here in 2021. So a correction was certainly in order when you look at this holistically, right? And not to mention all of the things that are happening in our world right now, right? That are working against the markets. And here's the other thing. Recession is looming. I didn't even mention that at the top. I didn't even mention recession at the top, right? So the recession concerns are also putting a damper on the overall markets right now too. And, the good thing, if there's a silver lining about a recession, and during the recession, it's terrible, right? People, obviously everybody is struggling. People are out of work. It's not good, but there's a reason why we have recessions. It's basically to dial things back, to stop spending, right? And to kind of reset the economy. And it works. Historically, it works, right? Because recessions on average last about 11 months historically. What comes after that 11-month recession? And a lot of people say we're already in a recession. We've been in one since December. Just saying, right? So we could already be 5-6 months into this thing, really, with gas prices over $5 a gallon in the Midwest, right? So if we're already there, right, maybe we're halfway home. But what comes after these recessions are a decade of growth historically. Historically, after an 11-month recession, you get about 10 years of economic growth that provides a ton of opportunity for investors. Because again, it's buy low, sell high, right? Well, there's no better time to buy if you have the capital than in a recession, right? Because the markets are usually always in the tank during a recession, right? But what comes after that is big economic growth. So, that's the silver lining here in terms of what comes after a recession. So let's see what else we got going on here. Buying the dip and hodling, basically because I don't know how to swing trade yet, but so be it. That's okay, Tracy. And, it's very hard to time the market. It's very hard to time the market. I think a lot of people would just tell you, especially the people I met, out in Miami, they just buy Bitcoin every day. They don't care. They don't care what the price is. They just buy. They're buyers. They don't look at charts, and they've done pretty well. Now, a lot of them have been buying Bitcoin since 2012 or 2015, right? Just dollar cost average. They just buy every day. Anybody who's bought Bitcoin every day since 2012 or 2015 or 2020 for that matter is up in their portfolio, right? 100%. So, there are a number of different philosophies. There are traders. There are also, people who just buy, right? But you can also, Tracy, inject some form of swing trading. What I like to do on swing trades is I try to get out ahead of catalysts, right? I try to get ahead of catalysts. If you know a catalyst is coming, even in a bear market, sometimes, usually you'll get some kind of pump off that, right? And you can time that up and, make a little bit of money that way. But it's really hard to time the market time and time again. It's very difficult. I don't try that much to do it. Good morning, Glenn. How we doing? Shiba needs massive burns in the trillions. What's up, Boomer? Yeah, Shiba needs massive burns. I mean, the burns are not going to have a huge effect on the price, Boomer, right now. I mean, there's too much of a supply. But I mean, you shouldn't be banking on burns to be the only thing that's going to help Shiba Inu. I mean, growing the global crypto market cap will help SHIB. Growing the holder base will help SHIB. Coming out with utilities such as Shibarium and a game and other things they're building in their ecosystem will help SHIB. Global adoption in crypto will help SHIB. So it's not just about burns. What's up, Daniel? What's happening, man? It looks like Bitcoin's going back down. All cryptos are going to follow, but hopefully by July, things will turn around. Roberto, I hope so too. I'm thinking probably late summer, early fall is when we could make a turn for the better, personally. But again, they're just, best guesses right now, right? Good morning, Raphael. How we doing? Jumpin' Jack, what's happening, man? Good morning. Good morning. Poor man investing. Good morning. Camp, what's happening? First sip, nice. Got the coffee. Tracy, nice to meet you. Nice. What's up, Crypto Queen? How we doing, Tammy? Good morning, Zach from the Philippines. What's going on? How we doing? Cheers from Seattle. Good morning, Simon. Zay, what's happening, man? I've increased several positions over the last month. Keep adding what you can afford to add and ride out the wave. I like that, Will. Yeah, don't invest what you can't lose, right? And yeah, I mean, I've been slowly adding to some of my favorite blue chips as well. These are 1 hour sticks, by the way. Gonna keep that on SHIB. Yeah, I've been slowly adding to my blue chips as well. So Bitcoin and Ethereum, I'm buying a little bit every day right now. Cardano, under 50 cents. It's been there a lot lately. I've dabbled in that just about every week since April. Just been slowly accumulating Cardano. Solana, I've left alone. I did buy some during a previous dip earlier this year, but obviously it's dipped a lot further. I'll just let that ride. I do think Solana will bounce back, but I haven't spent a lot of time accumulating more Solana during these last few weeks or last few months. Polkadot, I did add some Polkadot, not a lot, but it was a good opportunity for me to get into DOT when I totally missed this back in 2021. It had a nice run. Shiba Inu, of course, been slowly adding there. Didn't add a lot. I wanted it to get down into the sixes. Just never got there. Avalanche, I did add a little bit of that. Polygon, same thing. Crow, of course. Algorand, yes. VeChain, yes. ApeCoin, not yet, but I'm looking to do so. It's below my average price of like $6.20 right now. So I am looking to add ApeCoin here soon. I don't think it's going to fly high here anytime soon. I should look at that. I mean, it is up 25% on the week. You could have got this thing. How low did this thing go? Man, this thing got really low, almost to $3 even. It's a great ad there. There was a nice swing trade opportunity, huh? Although it's Monday morning quarterback every time you look at it like that, right? It's like, oh, well, I missed out. Well, it's easy to say that now. Gala's down here somewhere, and obviously you guys know how I feel about Gala, right? If anybody's new here, if there's one outside of the top 50 that I'm most bullish on, it is Gala, without a doubt. So I've definitely been accumulating Gala. Got big plans with Gala, Cardano, and Crow, of course. Those are the three I've really tried to accumulate the most of. Gala, Crow, and Cardano, for sure, right now. Outside of buying Bitcoin, Ethereum every day. So what are all the centralized exchanges withdrawal pause now? I haven't seen that. Coinbase had some issues yesterday. I did see something like that, but I think they got it all sorted out. Gobbled up ETH at under 900. Can't wait to see at 600. Nice, Larry. Appreciate you coming back, Larry. Daniel says there's issues with total market cap as a metric, as a lot of valuations are repeat lens of the same locked value. I hear that. Yeah. But I mean, there's something to glean from that just in terms of how far we've come. Daniel's always got to correct me. Great day yesterday for Shiba. Yeah, definitely. Just buying the dips and holding. Nice, Nicholas. Sape fam sends love. Big things coming. Keep doing amazing work. Appreciate you, man. Right back at you, brother. To all investors, Trust Wallet lets you buy the debit card and credit card in case all exchanges. Okay, gotcha. That's good stuff, Zay. Appreciate that. It's good stuff. As well as your ledger. Yep. E-Travel. Good morning, man. Man, I'm way behind in chat. Good morning, everybody. What is happening? About to brew the first cup, brother. Nice, true. Peggy Paris, good morning. James, good morning. How much do you think SHIB will go up in the bull run, mate? Gains, I don't have a crystal ball, right? But I do think SHIB will have a similar run that it had in 2021. It's become a little bit of a hedge, right? Shiba Inu has. There are a lot of Ethereum whales that park money in SHIB because when the market runs, SHIB runs hotter than Ethereum. And they park money there because of the high liquidity. They have a lot of liquidity. So SHIB is becoming a household name, and it's not going anywhere. And I think it's still, in my opinion, kind of a gateway into crypto because of the price of it. It's still attractive. You can get millions and billions of tokens, right? And that psychological effect is important because you feel like you have a lot more, right? Rather than putting $500 into Bitcoin, you don't even have nearly one Bitcoin, right? But when you put $500 into Shiba Inu, you've got a ton of SHIB tokens. right? Good morning, everybody. S. McQueen, what's happening? Kitty Jojo, thank you so much for becoming a new YouTube member. Appreciate you. Which platform is safest and easy for a newbie? Bitcoin is confusing to purchase. Best place for a newbie, if you're in the United States and you want to use a centralized exchange, you're just getting started, I would say FTX or Coinbase. Crypto.com is relatively easy as well. I just don't like their interface as much as Coinbase, personally. Apollo Crypto has been strong. Yeah, let's jump over and talk a little bit about Apollo here. And it is Apollo Crypto now. It's not Apollo Inu. They dropped the Inu. They are now Apollo Crypto. Obviously, the DAO that is created to help fund creatives. They've already done it 6 weeks in a row now. They've given out $10,000. And Apollo has been on a great run here the past week or so. We've been in the green. And there's your hourly look. This was yesterday, big run up. Actually, 2 days ago, back on the 20th. This was yesterday. So things have been really looking strong for Apollo after a decently long consolidation pattern here. Down at the bottom, we have had a nice little spike. And I'll show you a little bit about that rebrand. This is the 1 day. This is the full look at the chart. So you could see here. I mean, obviously, every chart had something looking like this coming down here the past several months. But Apollo is bouncing back really, really nicely. It's back to where it was here on its way up in February, which is really good to see. Let's see here. Let's jump into their Twitter here and see Apollo Inu token no longer exists. So if you're looking for them, it is now under Apollo Crypto DAO. They're able to transfer all their followers over there. It's at Apollo Crypto DAO now. So huddle up, content creator contest number 7. So this will be the 7th week in a row. 1 day in, and this could already be our hottest contest yet. Votes are rolling in. So here are all the people competing. Lena, Elizabeth, Daniel, Rob, Omar, and Matt. And these people down here are all different types of creators, right? Some may be guitarists, some may be artists. And, then it's a week-long voting period. And when you go to the website, it walks you through how to vote. Voting ends in 5 days, 5 hours, 44 minutes, 46 seconds. Connect your DeFi wallet here. You must hold about 1.5 million Apollo tokens to vote, right? That's the whole idea with the DAO. And then it's kind of cool. You can actually come over here and view their profiles, right? And then they have a little video about themselves. It's really cool. So what I really like about this, obviously, I love that they're helping people 100%, right? Like they're literally changing lives. They're giving, one of these creators $10,000 to jumpstart their career and to help, whatever they need. If it's a DJ, maybe it's better equipment, a better mic, right? I mean, $10,000 can go a long way in a creative's career, right? Whether it's resources, whether it's actual items. 98 votes have already been submitted. There's all the votes. That's all logged, right? And it's getting bigger and bigger each week. But obviously, they're helping people. What I also like about this in terms of growing the project is it creates kind of built-in marketing, because what happens is all of these people here who are up for a vote, they're telling all their friends and family that, hey, come vote for me. I can get 10K to help fund my project. Well, what does that entail? That entails people to go over and buy Apollo. So it's kind of helping people get into crypto in a way too. Shake out again, then start in the next bull run. I think so, John. I think that's what a lot of people are saying, right? Good morning, Faye. How are we doing? Crypto Mimi, good morning. They're basically like traveler checks in credit card form. I don't know what you guys are talking about there. Missed that. What's good, Zach? Marathon jogger in this game, not selling anything. Nice. Just slowly buying. I like it, Delon. I like your strategy, man. I haven't heard of that, Zay. What is that? I have no idea, bro. Do I see Bone exploding anytime soon? Well, I mean, nothing's going to explode anytime soon, I don't think, in a bear market. I mean, maybe it's, maybe it has a little pop in the price like it did yesterday when SHIB went up, right? Let's see where Bone's at right now. But if we get back into a bull run, or I should say when we get back into a bull run, and Shibarium is out, yes. I think Bone is going to have a big run for sure. At 44 cents, Bone's been above $3. So it's been consolidating for a very long time. I mean, yes, it's a big piece of the Shiba Inu ecosystem. So yes, I mean, definitely think it can make some major moves. And it's really not listed on any, major exchanges either. Market cap's only 3 million right now. That's nothing. I mean, the market cap of Bone is 3 million. Like Apollo is 10x the market cap of Bone. Think about that. Apollo's actually more than that, $34 million market cap. That's 10x the market cap of Bone. So Apollo's got a lot of room to run. Powell speaking. Boca, can you send me a link? See if I can find him. Here we go. I've got it. All right, live Fed Chair Jerome Powell testifies before Senate banking on monetary policy. Let's see what he says. Thank you, Boca. Appreciate you.
Companies would rather charge higher prices than increase supply to meet demand. We aren't witnessing traditional inflation. We're watching Russia and OPEC drive up prices, and American energy companies engage in wartime profiteering. At the root of the higher prices and the empty shelves are the same problem that's been shipping jobs overseas and keeping wages low for decades, from Nevada to Massachusetts to Ohio. Corporate power, concentration reaching into every industry and market, into every corner of the economy. Our economy doesn't have to be a zero-sum game where Wall Street wins, everyone else loses. We can create an economy that reflects our values and works for everyone. We passed the American Rescue Plan, including the child tax credit, the biggest tax cut for working families ever. And despite what naysayers claim, of course it wasn't the cause of inflation.
I hear you, Eddie.
The American families that I talked to, and empowered them to keep up with the cost of raising children. We passed the bipartisan infrastructure bill, a long-term investment in economic growth that creates more jobs, strengthens supply chains, improves our bridges and roads and public transit. Last week, President Biden signed the Bipartisan Ocean Shipping Reform Act into law, bringing down ocean shipping supply chain costs. We need to build on these successes to build an economy that rewards work, making things in America. We should pass our Supply Chain Resiliency Act and begin to bring manufacturing back to our country. We should bring down the cost of prescription drugs and housing and childcare and elder care and other costs that have been rising for decades. We need to pass the Protecting the Right to Organize Act to empower workers in the workplace and our economy so they actually get their fair share. We need to crack down on corporate concentration and consolidation. Fair competition is good for workers and consumers and Main Street businesses. It's a core American value. It's how we bring costs down and ensure that workers don't always pay the price for powerful people's bad decisions, whether it's a dictator in Eastern Europe or a Wall Street executive. In a truly fair economy, people don't have to choose between two bad options, low wages or high prices. No one likes inflation. People want good jobs that pay a living wage. Americans want to work. They want to work with dignity. That's central to the functioning of our economy. And as Chair Powell knows, it's part of the Fed's mandate. We must continue to power workers and strengthen the labor market. Wages are clearly not responsible for inflation now. We can't forget that almost 6 million people are still looking for work, actual workers behind the numbers whose livelihoods are directly affected by the decisions the Fed makes. And as interest rates rise and financial stability risks increase, it's even more important to keep a close watch on the biggest banks so that excessive risk-taking doesn't create even more problems. Banks must have enough capital to withstand a crisis. They must serve their communities, not just enrich themselves with stock buybacks and exorbitant executive pay. And mergers must benefit the local community, not just shareholders. We've seen too much evidence of big Wall Street banks behaving badly, shunning small businesses, raking in billions in overdraft fees, discriminating all too often against Black and brown borrowers. Chair Powell, you must also ensure we have a strong payment system that works for Main Street banks and consumers so people don't feel like the only option is a risky and unregulated alternative financial system backed by nothing but empty promises. The thousands of proxy currencies like stablecoin and other digital assets, they promise transparency and they promise transparency and democracy are missing one thing. They aren't backed by the full faith and credit of the United States of America. The Federal Reserve, our nation's central bank, must use its authority to protect consumers and the financial system from these risks. And you, Mr. Chair, must ensure that the Fed has the highest ethical standards. After former Fed officials profited off their positions in last year's stock trading scandal, it's up to you to restore the American people's and us to restore the American people's trust in this institution that's critical for a healthy economy. I was encouraged when you updated the Fed's policies, but we need rules that have the force of law. That's why we need to pass my ban conflicted trading at the Fed Act. As chair of the Federal Reserve, you have an important role to play to make sure our economy works for everyone, not just those at the top. I urge you to remember the millions of working Americans who are counting on you. I will turn to today's ranking member, Mr. Tillis from North Carolina, and then Chair Powell. And the first questioner will be Senator Warren, who has another engagement. Plus, it's her birthday, so every time birthday she gets to go first if she asks. And
yes, it's live.
Introduce a judicial candidate in judiciary, so I may have to step out. Your 80th birthday today, Senator Kennedy? Senator Tillis.
Thank you, Mr. Chairman, and welcome, Chairman Powell. Congratulations on your confirmation. I was proud to support it. When you testified before this committee in March, inflation was at a 40-year high, and the Federal Reserve regional banks were stonewalling reasonable requests for information about their activities from banking Republicans. Unfortunately, neither situation has improved. Let's begin with inflation. Inflation is even higher now than we saw you in March. CPI is up 8.6 per year, a new 40-year high. Getting inflation under control is critical because American families are being squeezed every day by rising prices and mounting costs. Also critical to any discussion we have on inflation is an understanding of what served to turbocharge it. In March of 2021, the U.S. economy, as measured by the range of economic factors, was well on its way to recovery. Unemployment was at 6%. Down from its pandemic worst of nearly 15%, and continuing to make steady monthly improvements towards a tighter labor market. In fact, 18 states already had unemployment rates below 5%. They often cite a threshold to identify a labor market that's almost at full capacity. Likewise, consumer spending had recovered, and it was actually above pre-pandemic levels at 4.5%. And the personal savings rate had returned by 80% to its pre-pandemic state, indicating Americans were capable and willing to spend. Considering these factors and many others, CBO projected that the United States would return to pre-COVID economic levels and GDP output by mid-2021, just a couple of months away. At the same time, the Biden administration was aware of one major area of concern, the disruption of supply chains. In fact, President Biden issued a February 2021 executive order to review U.S. supply chains, in part acknowledging they were already straining to meet rising consumer demand. Yet despite these facts, a soon-to-be recovered economy, stronger consumer spending, and known limitations on supply side due to the documented supply chain issues, the Biden administration and congressional Democrats still somehow considered it responsible to ram through a partisan $1.9 trillion spending spree. It is little wonder how this catalyzed inflation we see today.
Yeah.
And don't just take my word for it. Just last week, economists at Morgan Stanley blamed the 40-year high inflation on, this is a quote from their report, excess fiscal stimulus, particularly the last $1.9 trillion package at the end of March 2021. Adding, this is what turbocharged consumption and drove inflation to 40-year highs. Considering this damning assessment of the last reconciliation package, I can only add that any efforts to revive Democrats' currently stalled tax and spending legislation would no doubt worsen our economic condition. Regarding the Fed specifically, though I'm pleased you have begun taking drastic action necessary to right the U.S. economy, these actions are long overdue. and monetary policy remains too loose. CPI inflation now stands at 8.6% per year, a new 40-year high. But the Fed fund rate sits at 1.6%. According to the Fed's semi-annual report, the rate should be over 6% under the Taylor rule. This disparity indicates not only the lengths the Fed has yet to go to normalize monetary policy, but also the fact that the Fed has largely boxed itself in to a menu of purely reactive policy measures. Unless the Fed works quickly to move away from their discretion-based monetary policy approach that has remained consistently well behind the curve, I'm concerned the Fed will lose its credibility to effectively manage the national economic situation. Regarding congressional oversight of the Fed, I remain concerned that the Fed and its regional banks continue a pattern of stonewalling reasonable requests for information. The latest example concerns the fairness, transparency, and consistency of Fed decisions to granting highly valuable Fed master accounts. This is a significant public policy issue. Ranking Member Toomey, myself, Senator Lummis, and others have repeatedly requested information about this from the Fed and the Kansas City Fed, yet we still have few, if any, answers. Just this month, the Kansas City Fed refused to provide any information about its recent decision to revoke the master account for Reserve Trust, a non-bank fintech. This is significant given the controversy that arose in former Governor Raskin's nomination process when it was revealed that the Kansas City Fed reversed its denial of Reserve Trust application for a Fed master account following a call from Ms. Raskin. Now, months after defending the decision,
Yeah, I know, right, John?
grant Reserve Trust a master account, the Kansas City Fed abruptly revoked the account without explanation. The Kansas City Fed won't give banking Republicans information or even a briefing about this curious reversal. And it's important to point out that Republicans aren't the only ones who have found it difficult to conduct Fed oversight. Several of my Democratic colleagues, including Senators Warren and Menendez, have been vocal when they also found their oversight efforts met with resistance. To address this unacceptable state of affairs, Congress should increase transparency at the Fed. Two simple steps that Republicans and Democrats can take together are subject the Fed banks to FOIA. I know, right? Which they currently are not, and forbid the Fed from using FOIA exemptions to withhold information from any member of Congress, not just committee chairman. This is the second.
Hit them likes.
A bipartisan proposal. It's already
totally
passed
free.
the House, and something Senator Ossoff has mentioned with regard to various federal agencies in the past. Likewise, Congress should also explore making the presidents of the regional Fed banks presidentially appointed and Senate confirmed positions. This is another bipartisan idea, as Senator Reid previously proposed this requirement for the New York Fed bank president position. And in 2015, Chairman Brown himself raised the idea during a banking committee hearing on reforms to the Fed. The time has come to revisit these sensible ideas and others in order to make the Fed more transparent and more accountable. Thank you, Mr. Chairman, and I look forward to Chairman Powell's testimony.
Thank you, Senator Tillis. We'll hear from the Chair of the Federal Reserve on monetary policy, the state of our economy. Congratulations again in your second term, second confirmation to your second term. Thanks for your service and your testimony. Please proceed.
Here we go.
Thank you, Chairman Brown, Senator Tillis, and other members of the committee. I appreciate the opportunity to present the Fed's semi-annual monetary policy report. I'll begin with one overarching message. At the Fed, we understand the hardship that high inflation is causing. We are strongly committed to bringing inflation back down, and we're moving expeditiously to do so. We have both the tools we need and the resolve it will take to restore price stability on behalf of American families and businesses. It is essential that we bring inflation down if we are to have
a good picture behind there,
a period of strong labor market conditions that benefit all. I will review the current economic situation before turning to monetary policy. Inflation remains well above our longer run goal of 2%.
She's taking a long time taking that picture.
In April, total PCE prices, that's personal consumption expenditures prices, rose 6.3%. Excluding the volatile food and energy categories, core PCE prices rose 4.9%. The available data for May suggests that the core measure likely held at that pace or eased slightly last month. Aggregate demand is strong, supply constraints have been larger and longer lasting than anticipated, and price pressures have spread to a broad range of goods and services. The surge in prices of crude oil and other commodities that resulted from Russia's invasion of Ukraine is boosting prices for gasoline and fuel and is creating additional upward pressure on inflation. And COVID-19 related lockdowns in China are likely to exacerbate ongoing supply chain disruptions. Over the past year, inflation also increased rapidly in many foreign economies, as discussed in a box in the June monetary policy report. Overall economic activity edged down in the first quarter as unusually sharp swings in inventories and net exports more than offset continued strong underlying demand. Recent indicators suggest that real GDP growth has picked up this quarter, with consumption spending remaining strong. In contrast, growth in business fixed investment appears to be slowing, and activity in the housing sector looks to be softening, in part reflecting higher mortgage rates.
Mm-hmm.
The tightening in financial conditions that we've seen in recent months should continue to temper growth and help bring demand into better balance with supply. The labor market has remained extremely tight, with the unemployment rate near a 50-year low, job vacancies at historical highs, and wage growth.
Probably a wide shot, Paul. Probably see everybody behind in front of them.
Employment rose by an average of 408,000 jobs per month, down from the average pace seen earlier in the year, but still robust. Improvements in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics. A box in the June monetary policy report
discusses developments
in employment and earnings across all major demographic groups. Labor demand is very strong, while labor supply remains subdued, with the labor force participation rate little changed since January. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation poses significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective.
She's back.
Against the backdrop of the rapidly evolving economic environment, our policy has been adapting, and it will continue to do so. With inflation well above our longer run goal of 2% and an extremely tight labor market, we raised the target range for the federal funds rate at each of our past 3 meetings, resulting in a 1.5 percentage point increase in the target range so far this year.
Yeah, that's a girl.
The committee reiterated that it anticipates that ongoing increases in the target range will be appropriate. In May, we announced plans for reducing the size of our balance sheet, and shortly thereafter began the process of significantly reducing our securities holdings. Financial conditions have been tightening since last fall and have now tightened significantly, reflecting both policy actions that we have already taken, as well as anticipated actions. Over coming months, we'll be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. We anticipate that ongoing rate increases will be appropriate. The pace of those changes will continue to depend on the incoming data and the evolving outlook for the economy. We will make our decisions meeting by meeting, and will continue to communicate our thinking as clearly as possible. Our overarching focus is using our tools to bring inflation back down to
that guy doesn't look very impressed.
And to keep longer-term inflation expectations well anchored. Making appropriate monetary policy in this uncertain environment requires a recognition that the economy often evolves in unexpected ways. Inflation has obviously surprised to the upside over the past year, and further surprises could be in store. We therefore will need to be nimble in responding to incoming data and the evolving outlook. And we will strive to avoid adding uncertainty in what is already an extraordinarily challenging and uncertain time.
I know, right?
We are highly attentive to inflation risks and determined to take the measures necessary to restore price stability.
Pretty
The
monotone.
American economy is very strong and well positioned to handle tighter monetary policy. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you very much, Mr. Chairman. Let me, on behalf of Chairman Brown, recognize Senator Warren.
Thank you, Acting Chairman. I appreciate the help of the Chairman this morning. And thank you for being with us, Chair Powell. So Americans are struggling with rising costs and all eyes turn to the Fed. Last week, you announced that the Fed would raise rates by 0.75 of a percentage point, the biggest increase in nearly 30 years. So let's talk about what the Fed is and isn't doing when it raises interest rates to try to bring down inflation. Let's start with gas prices. The price of gas is up 40% since Russia invaded Ukraine in February. Chair Powell, will gas prices go down as a result of your interest rate increase?
I would not think so, no.
Okay. That matters because gas prices are one of the single biggest drivers of inflation. Energy prices overall drove a third of the inflation last month, but the Fed's tools.
How does he have the power to decrease the gas
price?
price?
Another necessity, food. Price of groceries is up nearly 12% this year. Americans feel the pinch. No matter how much groceries cost, people still got to eat. Chair Powell, will the Fed's interest rate increases bring food prices down for families?
I wouldn't say so, no.
Okay. So a Fed increase won't bring down these prices. And why? Because rate hikes won't make Vladimir Putin turn his tanks around and leave Ukraine. Rate hikes won't break up monopolies. Rate hikes won't straighten out the supply chain or speed up ships or stop a virus.
You still need them.
Lockdowns in some parts of the world. So let's talk about what interest rate increases can do. Chair Powell, you said last
They should have did it a long time ago, but they still need them now.
Quote, moderate demand. Can you just explain a little more about what that means?
Sure. So we think about interest rate increases as affecting financial conditions and then the economy through three broad channels. The first of which is interest-sensitive spending. So that's durable goods and automobiles and things like that. So interest rates go up, people's demand for as a result of higher interest rates will moderate or decline so that supply and demand can get into better balance. The second channel is just asset prices generally. Interest rates, as they go up, will cause asset prices to moderate across the economy, and people spend a little bit less out of their lower
shit,
wealth.
that's
the
funny.
Third channel is the exchange rate, which is really just another asset price, and that just basically as the dollar strengthens. As rates go up, the dollar would strengthen, which would tend to drive.
So I appreciate this, and I do appreciate the explanation. But let me just see if I can just put a little more plain vanilla explanation of what's going on here. If I understand what you've said and what economists are saying across the board is that when you raise interest rate, there's going to be less money to invest, and that is, it's going to dampen business investment. Is that a fair statement?
I think the idea is to moderate demand
to invest
so that it can be in better balance with supply.
And slow down spending.
And is well in excess of supply in some areas of our
more expensive to invest, which in turn is going to throw workers out of work. And when they're out of work, they have less money to spend. So I get that rate increases stop companies from spending money to build new plants or to buy new trucks or to hire new people, right, Chair Powell? When money's more expensive, they're less inclined to do that. I think that's what you just said on asset pricing, right?
Well, in the labor market, you have, as you know, a situation where there's a shortage of workers, and there are two job vacancies for every person who's actively looking.
This is why we can't get anything done.
Part of this is to get the labor market back into balance.
Well, I appreciate you call it back into balance. What I'm trying to get at, though, is what does the tool of raising rates do? And part of what you just said is that
slows down spending.
In effect, the cost to invest, to buy those trucks or new plants or to hire new people. The reason I raise this and the reason I'm so concerned about this is rate increases make it more likely that companies will fire people and slash hours to shrink wage costs. Rate increases also make it more expensive for families to do things like borrow money for a house. And so far, the cost this year of a mortgage has already doubled. Inflation is like an illness.
Yeah, exactly.
And medicine needs to be tailored to the specific problem. Otherwise, you could make things a lot worse. And right now, The Fed has no control over the main drivers of rising prices, but the Fed can slow demand by getting a lot of people fired and making families poorer. And while President Biden is working to increase energy supplies and straighten out supply chain kinks and break up monopolies and bring down prices, you could actually tip this economy into recession. So I just want to say, you know what's worse than high inflation and low unemployment? It's high inflation and a recession with millions of people out of work. And I hope you'll reconsider that as you before you drive this economy off a cliff. Thank you, Mr. Chairman.
Thank you, Senator Warren. On behalf of Chairman Brown, Senator Tillis, please.
Senator Reed, I'm going to
Sounds so enthusiastic.
You go before me, and then I'll follow in turn.
Quite all right, sir.
Thank you. Thank you, Mr. Chairman. Chairman Powell, earlier this month, Secretary Yellen acknowledged she was wrong about the risk of inflation. Previously, you also acknowledged that the Fed got it wrong in thinking that inflation would be transitory. Yet myself and other members of this banking committee here have been warning about inflation for over a year. Last July, nearly 1 year ago, when you came before this committee, I raised my concerns about the risk of rising inflation, particularly.
The rate hike should have came a long time ago. That's why they're having to do it so rapidly now and why it's having such a drastic effect, in my opinion. The rate hike should have came a long time ago.
Following the enactment of a $2 trillion spending bill. At that time, there was already evidence that inflation was affecting numerous areas of our economy. I discussed the year-to-year price increases on agricultural goods such as corn, wheat, and soybeans at that time. I pointed out the rising cost of metals, including copper and aluminum. I mentioned the increase in energy prices, used cars, and airline tickets. As someone who remembers, and I do from this committee, encountering high inflation during the 70s, I warned that many of the same conditions present then, such as loose monetary policy and significant government spending, were occurring again, among other things. My main concern last year was that the Federal Reserve would fail to address rising inflation before it was too late. 11 months later, this concern has come to fruition. And as we sit here today, inflation, as you've already pointed out, is at a 40-year high. The average gas price is over $5 a gallon. And we're currently in the midst of 12 consecutive months of inflation above 5%, including spiking to 8.6 last month. Ultimately, Mr. Chairman, as inflation continues to run rampant, I believe the Federal Reserve and this administration failed the American people by not heeding these warnings a year ago and by not acting sooner to address it. We're where we are today. I know that. The consequences of being wrong on inflation are now being felt, as has been pointed out here today, by American families and workers across the country. And despite the recent decision to raise interest rates, the Federal Reserve still has a long way to go to get inflation under control. What can we expect in the future from the Federal Reserve? And I know you don't have total control over inflation, but you have a lot of sticks there. And what will you use to bring this under control?
Thank you, Senator. So financial conditions, of course, have tightened and have priced in a string of additional rate increases, and that's appropriate. Well, as you pointed out, and as Senator Tillis pointed out as well, our policy rate is only at 1.6%, but all out the curve, the market is pricing in increases. So financial conditions have already priced in additional rate increases, but we need to go ahead and have them. And I think that the most recent inflation indicators of various kinds suggest to us that we needed to accelerate the pace at which we get up to a level that is neutral, that is close to the longer run.
It's probably going to be the 75, Mario.
How much further and faster to go. And so that's what we're doing. I think you can see from the moves we're making now that we do understand the full scope of the problem, and we're using our tools to address it pretty vigorously now.
Mr. Chairman, explain to us again how important one of your mandates is price stability, how important price stability is to all Americans.
So
No, this is
Really
this is their
the bedrock
report
of the economy in this sense, in the sense that you really
at the
can't
halfway
have
point in the year.
a
This is
sustained
their report.
period of maximum employment, our other co-equal goal. You can't have that without price stability. And so we must restore price stability, and we will. We have the tools and the resolve and hopefully the judgment to accomplish that task. It's essential that we do.
What's your next step?
Well, if you look at the market has been I think reading our reaction function reasonably well, and I think what you will see is continued progress toward expeditious progress toward higher rates. I'll say this: the committee, the center of the committee wrote down that rates would be between 3 and 3.5% by the end of this year, as of a few weeks ago, as 1 week ago.
Is this Federal Reserve Board of Governors under your leadership committed, as Dr. Volcker was some 40 years ago, to bringing inflation under control no matter what?
I would never want to try to compare myself to Paul Volcker in any way, but I will say that we are strongly committed to restoring price stability. We do understand that it is the thing that we need so that we can get back to the kind of labor market that we all want.
But reaching the standard that Volcker left at the Fed would be a high reach, but one that anybody there should try to get there, wouldn't it?
Yes.
Thank you, Mr. Chairman.
Thank you, Senator Shelby. I'll exercise my time now. Mr. Chairman, you point out in your testimony that the core personal consumption expenditures minus gas, food, and rent, 4.9%, and even slightly declined from the previous report. So that leaves the real culprits, gas, food, and rent.
You think these guys know about crypto?
The issue of gas price inflation is a global phenomenon. Is that correct?
Yes, gas prices are a function of oil prices to a significant extent, and then the refining spread as well.
Right. And that's had been exacerbated by the Ukraine invasion. We've deliberately, and the Europeans have deliberately cut off accessing Russian supplies, and that's added to inflation. And the other problem also with hydrocarbons, it's a cartel that sets the price. Is that accurate?
Sorry, what's a cartel?
It's a cartel that sets the price
Yes.
of oil worldwide.
Yes, globally, that cartel has a very major impact on the price of oil.
And they have decided that further production is not as lucrative to them as just sitting back and making money. That's what it appears like. With respect to food,
I hear you, Luke.
there are multiple factors there also. One is climate. We've seen loss of arable land. We've seen a lot of factors. All of this is outside the purview of the Federal Reserve, but I think it's helpful to understand what are driving forces in these price increases. Transportation issues with respect to food, that's a function of higher diesel costs, a function of lack of drivers. Again, the Ukraine, a significant amount of wheat is not being exported from Ukraine or from Russia, as well as fertilizers. That's driving the price. And then the rental affordable housing issue, that has been a crisis since I became a congressman in 1990. I recall marching in Washington for affordable housing in 1990. We just don't have enough.
How many of these guys know their Apple ID?
And that, I think, is a factor too. Are those the major causes for these increases in prices?
Those are some of the major ones. You could also point to some parts of the goods economy, which have been restrained capacity, and now you're actually seeing significant price increases in some of the service economy as it really reopens fully now, and that would be the travel and leisure sector.
There's another issue too. We talked about the cartels that dominate hydrocarbons, but we found, for example, during the pandemic, that there were really just 4 major
It's pretty hilarious
processes in the United States, and with 4 rather than a multiple of that, there is the ability to indirectly restrain supply and increase prices. In fact, some of my colleagues, particularly in the House, have been talking about the antitrust aspects of some of these price increases. Is that a plausible ingredient to the problem too?
So I think that's really a matter for the competition authorities, not for us. But sure, I think broadly speaking, our economy is very competitive. There will be some industries where that's less so the case.
So these range of you have to take action, and your basically tool is interest rates and going in and out of buying public securities. But we have a lot of work to do too, which is to try to resolve some of these issues. And we have to do it in order to assist your efforts, the fiscal policy and other policy. I'm very pleased to see the president sign legislation with respect to shipping reform. That's a step, but we have to do much more too. Isn't that true?
I think that's really a question for you. We're very focused on sticking to our knitting and carrying out the task that we've been assigned.
No, I appreciate that. And the independence of the Fed is something that has to be protected by everyone, including particularly yourself. A final sort of issue that I'm thinking of, we're at a tremendous, I think, turning point in our economy. Factors that 10, 15 years ago were not active, things like social media, et cetera. But one other factor with respect to hydrocarbons is perhaps the companies are either unconsciously or consciously limiting investment because they're anticipating an electrified power supply, electric cars, electric everything. Is that something that the Fed is looking at?
I think that is certainly, if you pick up the annual report of any of the big oil companies, you'll see that is something that is happening. And it's a rational economic response to, expectations about where future policy is headed.
No, I think there are so many factors here, but I think it's good to get some of them on the table. And thank you very much, Mr. Chairman. With that, let me recognize Senator Tillis.
Thank you, Senator Reid. Again, Chair Powell, thank you for being here. By the Fed's own analysis of various policy rules, including the Taylor Rule, the revised Taylor Rule, the Balanced Approach Rule, and the Balanced Approach Shortfall Rule,
It's been brutal.
rates should have begun to rise long before they did.
I agree with that, Mr.
According to the
Tillis.
Fed's own analysis
Agreed.
of these rules, the Fed's fund rate should currently be
Just
above
said that.
6%. This is in a report to Congress.
They should have
Yet the
started
rate
hiking them
currently
a long
stands at
time ago.
1.6%. Likewise, these same rules should have prompted the Fed to begin raising rates Q4 last year, Q1 this year. I'm concerned that the
That'd be
Fed
epic.
has opted out of rules-based to discretionary monetary policy. As the Fed reviews monetary policy strategy, Chair Powell, will you commit to considering an increased weight for a rules-based strategy in Fed decision-making? And if not, why?
So we do use policy rules like the various forms of the Taylor Rule in all of the analysis that we do. If you're thinking about how monetary policy will affect the economy, you have to have some sort of a rule like that. Fed has never really used them in a prominent way to actually set policy in real time. But that's not to say they don't shed light, and we do consult them we consult them on an ongoing basis. The rules called for deeply negative rates during the pandemic, and we didn't do that. They did call, of course, for rates to move up, and rates now really are moving up much closer to where the Taylor Rule, various forms of the Taylor Rule are. And I think by the end of the year, we'll be pretty close to where some of the Taylor Rule iterations are. So it's something that we consider. I think in a couple of years, when we look at our framework again, that's something we could look at.
And Chair Powell, could you just briefly explain the variance between rules-based decision-making being at 6 and where we are today? What other factors came into play?
So what Taylor Rules don't take into consideration changes in financial conditions. They just look at the overnight policy rate. As I mentioned earlier, we began signaling, and the way we're set up now to signal policy changes going forward with the summary of economic projections that we do 4 times a year. So markets price that in, and you're getting a lot of policy tightening well in advance of actually raising rates. As you pointed out, we're at 1.6% only on the federal funds rate, but look out the rate curve all the very substantial additional rate hikes are already priced in, and they're affecting financial conditions, and they have been for several months. So that's one way of thinking about it. It's really only at the very short end of the curve where rates are still in negative territory from a real perspective. If you look farther out, real rates are positive right across the curve, and that's really what you're trying to achieve with policy in a situation like this, where we have 40-year highs in inflation, and we know we need to have restrictive policy, and that's where we're headed.
Thank you. In 2012, the Fed adopted its current 2% inflation target, then amended this in 2020 to allow inflation to run over 2% target, so that inflation averages 2% over time. Many warned this approach would simply give inflation a foothold before the Fed could respond. Now inflation's at 6.5% per year, and many serious analysts are predicting a recession. According to the Fed's framework, will the Fed push inflation below 2% so that it averages 2% over time?
No, that wasn't the way the framework worked. And I should clarify, though, the framework was carefully focused on what we knew, which was the economy of the last 25 years. The pandemic hit a few months afterward, and I think we've been aware since reasonably quickly after that the disinflationary forces of the last quarter century have been replaced, at least temporarily, by a whole different set of forces. And those are the forces that our policy has been reacting and dealing with. And we're well aware of that. I think that what we were looking at was a world in which you didn't see inflation move up even when unemployment was for an extended period well below 4%. This is a different economy, different forces. The real question is, how long will this new set of forces be sustained? And we can't know that. But in the meantime, our job is to find price stability and maximum employment in this new economy.
And final question is, there is some renewed discussions about increased spending and increased taxes through reconciliation. Just hypothetically, if Congress were to pass a bill that increased spending by $500 billion or $1 trillion and raise taxes, would that make your job easier or more difficult?
I swore off getting involved in these fiscal debates a year or so ago, and I'm determined to see if I can't stick to that. But remember, we can always incorporate. And what we do is we take fiscal policy as given and we react appropriately.
Well, then maybe instead of policy working through Congress, but policy that was passed by Congress, do you believe that the $1.9 trillion spending package last year had any effect on inflation?
This is really not our job to pass judgment. We didn't pass judgment on the Tax Cuts and Jobs Act or the CARES Act or that act as well, the ARP. So I really think that's a job for Congressional Budget Office.
Thank you, Chairman Powell.
Thank you, Senator.
Senator Cortez Masto of Nevada is recognized for 5 minutes.
Thank you, Mr. Chairman. Chairman Powell, thank you for being here. Let me start with high prices. Because not only in Nevada, but across the country, we're seeing high food, housing, and gas prices, which really is creating a financial hardship for too many families. And I want to start with gas prices first. In Nevada, average price of gas is $5.60. In Las Vegas, about $5.60. In Reno, at $6 a gallon. And as gas prices rise across the country, oil and gas companies, we know, are making record profits, but are using that money to continue to consolidate their industry and pay for stock buybacks instead of investing in increased oil production. On one of them, and one I've heard, is over 9,000 permits that they have that are unused drilling permits, or they're not expanding their refining capacity. We also know that reduced refining capacity is a particular problem that has been caused in large part by decades of oil industry consolidation and is driving gas price hikes to be as much as 61 cents a gallon higher than expected. So when considering the drivers of inflation, how much do Federal Reserve economists consider consolidation in an industry? And what else can we do to hold these industries accountable for their contributions to rising prices?
Those are really questions for the competition authorities, questions of industry structure and consolidation. They really aren't questions that we directly address. We raise interest rates, and our job is maximum employment.
But I have to push back. You have to consider that. I mean, you're considering what's happening in Ukraine. as a variable on inflation and high prices. So you have to consider the fact that we have these oil companies. They are exclusively control this commodity that is key for this country. We know that not only do they produce and decide how and when they're going to drill crude oil, we also know the refineries, and quite honestly, the refineries in this country are not prepared to refine the domestic oil that even comes from Texas and the Dakotas. The refineries are prepared to refine the oil that comes from out of this country. And we also know that many of the oil companies have their own traders that are trading on the price of crude oil in this country. I mean, listen, you just talked about an outside agency. This is why this is so important and why I am a co-sponsor of the Transportation Fuel Market Transparency Act. Glencore was just fined $1.1 billion because they were manipulating the fuel oil prices to their benefit. So that is something you have to take into consideration when we have an industry like these gas and oil companies that are so consolidated. They are having an impact on the prices to the detriment of the people in my state. So that has to be something you consider and take into consideration when you're looking at the impact that people across the country are seeing from these high prices. I hope it is. Please tell me you are.
Well, I think we see that the global oil prices, which have, very important effects on gas prices here at home, are set on the global market. And as we mentioned earlier, there's a large cartel that is responsible to a significant extent for setting those prices. We take that as given.
So do you pay attention to what is Wall Street is saying and what these cartels are doing? When you say cartels, these are these big oil companies, and they're indicating that, well, I'm not going to drill because I'm making profits because the price of gas is so high. So you would assume, I would hope that you would take that into consideration, that it's going to continue these high prices because there is a challenge in holding these oil companies accountable.
So in principle, we pay attention to anything that could affect the use of our tools and the need to use our tools. And I think with the future price of oil, the best thing you can probably do is look at oil futures, because that futures in theory should be taking into account all of these factors, and that's what we do. But ultimately, the question for us is, do we raise or lower interest rates? We don't have tools that would address these practices that you're discussing. They're not really, of course, we understand them.
Well, do you have concerns that these oil companies are manipulating or controlling the prices that we have right now? Do you take that into consideration with the tools that you need to reduce inflation and reduce these costs?
Honestly, those are not judgments for us to make. The questions about industry structure and competition are really not, it's not our assignment. Our assignment is employment and price stability.
The outcome of that infrastructure is something you've got to take into consideration.
Yes.
Unless they change, the prices are not coming down. Unless they stop giving profits and sharing that with their shareholders and start addressing and looking at actually the consumer at the other end of this, who is bearing the brunt of it, these prices are not going to come down. I would assume you take that into consideration. Maybe I'm wrong.
Well, when you say take it into consideration, we do have to have a forecast of oil prices, and we do. But ultimately, though, the question for us is price inflation. What's happening with price inflation? And it's a macroeconomic question. It's not a question about industry structure or corporate behavior. It's a question about what will be the behavior of inflation across the economy. And in particular, there's really not anything that we can do about oil prices. There's a little, food prices is a bit more mixed, but for oil prices, they're set at the global level. It has to do with global oil prices and also the refining spread. Neither of these are things that we have the tools to affect.
Does it concern you that these oil companies haven't come to the table to look for a solution to help us reduce fuel costs?
I don't think it's appropriate for the Fed or for me to be reaching out into areas of policy that are not assigned to us. It's not up to us to comment on that sort of thing. We have a very specific job and precious independence to carry that job out. And I think the other side of that is stick to that job. And our job is maximum employment and price stability.
Thank you, Mr. Chair. My time is up.
Thanks, Senator Cortez Masto. Senator Rounds from South Dakota is recognized.
Thank you, Mr. Chairman. Chairman Powell, welcome again. It seems as though for the last couple of times that we've had you in front of this committee, inflation has been a primary item of discussion. I want to follow up just as my colleagues have, and I'd like to take it in a little bit different path, perhaps, because when it comes to breaking down the different causes of inflation, clearly there is the supply side and the demand side. The reality is that a large portion of the inflation stems from the higher energy prices, which is part of the supply side issue. When President Biden took office, January of 2021 through January of 2022, the price of unleaded gas has increased by 50% during that time period, from $2.33 to about $3.30 per gallon. Now, that was well before the Russian invasion of Ukraine. Higher prices are instead, I believe, a direct result of policy decisions made by the Biden administration, like prohibiting new oil and gas leases on public lands and waters and choking off future access through the Keystone XL pipeline, and increasing U.S. dependence on foreign energy sources by actively calling on OPEC to produce more oil. All of these seem to send a terrible message to the market about the future of investing in oil and gas processes within the United States. At the same time, Mr. Chairman, your tools are designed, as we've discussed in the past,
I'm going to let him answer this, and then we'll come back. I don't think anything's going to come of this.
to impact not necessarily the supply side, but the demand side of inflation. So if you attempt to use your tools that are available at this time to address what I believe to be the policy-induced side of inflation, do you risk hurting the economy by using these interest rate increases when, in effect, as you've indicated earlier here in this meeting, that you really can't impact the price of gas or the price of food?
I think that's right. We know that our tools can't affect certain aspects of inflation, and that would include certainly energy inflation and food inflation. So nonetheless, our statutory goal is headline inflation. But we also know that core inflation is actually a better indicator of headline inflation than headline inflation itself is, because food and energy tend to be quite volatile. They tend to move up and move down, and that's been the history. So core enables us to look through that volatility. And so we focus very much on that as a better representation of what underlying inflation of the economy is at any given time.
And I think but in this particular case, that core inflation, if we're not going to include some of those, what I think earlier we thought would be transitory in nature portions of inflation, they have proven not to be transitory. In fact, South Dakotans are now paying $682 more per month on goods and services than they were when President Biden took office due to inflation. The administration is claiming the Federal Reserve can fix our inflation problem. But as you just indicated, you focus on core, and your tools might very well work on core, but not on those really heavy drivers to inflation that South Dakotans are seeing like the rest of the country. See, Mr. Chairman, what I believe is going to happen here, and I just share this, clearly you are aware that you're going to be the person that takes the fall if inflation is not brought under control. And this administration is going to point to you and to the Federal Reserve saying, you have the tools to fix inflation and you're not doing your job. When in essence, the portion of inflation which Americans are feeling today may not just be the core inflation that some of your tools do, but the total cost of inflation that my citizens in South Dakota feel to the tune of, well, $682 more per month in living expenses than what they were when this administration took office.
So we're focused on the part of it that we can address, and that is there's a job to do on demand here. There are parts of the economy where demand exceeds.
All right, I'm done with that. We didn't really learn much, other than he did say that they're still going to be aggressive with the rates, which we kind of knew that already, kind of going in. Very kind of politically, charged answers, like not really talking in specifics. So that was interesting. I mean, we still have to listen, and it does impact crypto markets. I saw some people in the chat saying, like, why are we doing this? Why are we listening to this? Because it does matter. Whenever the Fed meets, whenever Powell speaks, it does affect markets. So that's why we're listening in, just to see if anything was said and anything anything we can glean from it. Bitcoin actually moved up a little bit during the conversations. I don't think there's any tie into that. It was at like 20,600. Now it's up to 20.8, heading back up to 21,000, at least here for the time being. Nice little pump in the price here. We did come back down off of our 21.6 yesterday, or 21.5. That's where we kind of peaked out. In the 7-day, we've got close to 23,000 in the last week or so. You could see in the last month, obviously, well before the big crash here about 10 days ago, we were up in the 30,000 range. But I would like to see us, continue to steadily move up. And if we look at the 7-day here, it was forming a nice pattern here, higher lows. And then yesterday, we kind of fell back down a little bit and created a lower low. But we'll see what happens here today throughout the rest of the day with Bitcoin. But I do want to get into some other cryptocurrencies here. I was talking about Apollo a little bit and kind of what they're doing. So this is their new Twitter account, Apollo Crypto DAO. I encourage you to kind of check out what they're doing on their website. They have a Trello board too, where you can like keep up to date with kind of some of the things they're working on. So a couple things that are in the works are some relatively big exchanges. At least that's what I'm hearing. Nothing specific yet, but perhaps we could be getting some news in the coming week or so, or maybe even the coming days or so. We don't know exactly, but there has been some conversation about that. And Apollo continues to steadily rise here. Look at these 17 ETH buys that came in while we were watching JPow. So that's interesting, right? And if we look at the 1 hour, we could see that is a really bullish looking chart there. This is dating back since the 18th, where we consolidated. We started rising here on the 19th a little bit, and then the 20th, 2 days ago, had a big run up. Yesterday had a big run up, and now today looking pretty solid as well here as we sit at that $36 million market cap here for Apollo. Everything else has went into the red here today. Essentially, that and Terareum are both up. Terareum obviously has some catalyst helping it right now as well. So we can talk about Terra a little bit. There's some big green candlesticks working there. They're up 20% here on the week, about 8% here on the day. And they have been steadily climbing here in the last 3-4 days as well. They're back up to a $73 million market cap is Terareum. So for Terareum, I'm going to have a video out on this as well. They are getting very, very close to having their 1 quadrillion token burn. They need 10,000 holders. This tweet, came out 2 hours ago, so they may be there now. They may be there by now. Let's refresh this, actually, see if they tweeted about it. There it is. Great news. There's 2 minutes ago. Great news. We have reached our 10,000 holders. We appreciate the great support from our holders during this bear market. Thank you for supporting Terareum. Now let's burn 1 quadrillion tokens. So there we go. Maybe that's causing some people to get in a little bit. I just retweeted that. That's big stuff for Terareum. Now, in addition to that, they are also right now in Asia at the Crypto Expo. So that is a big deal as well. If we go over to Terareum and actually just go to media, we should find, actually we could scroll on down here. We should find exactly what we're looking for here. Wasn't, oops, guess it was way down here, huh? Oh, you know what? I think Milton posted it. Here we go. This is 8 hours ago. Here are some people at the event. They're talking to them. Oh, that's RD, I think, isn't it? Yeah. Here was their expo booth. Their setup. So this starts a string of catalysts for Terareum, right? So the expo is happening today and tomorrow. But then after that, it's TerraPool, right? TerraPool is coming. And then the exchange. There's a Medium article that Dr. Praveen just put out recently. And I'm going to go into that in a little bit more detail in my video on Terareum today. So excited about that. Volt Inu green, is it? Is Volt a little bit green? Let's see. It's back down a little bit. It's down 3% today, but it has been green over the past 4 or 5 days. Volt has been. And in the past week, we're up 45%. So Volt has been climbing up nicely. I'll have a video on Volt today as well. There's somebody on Twitter who's been talking a lot about Volt with a huge following, over 2 million followers. So be on the lookout for that video too, dropping later. Amazon going good today. Okay, nice. How did you purchase Apollo? I got mine on the decentralized side of things. I was a day one investor, man. I got in on Uniswap, but now they have 3 exchanges and many more in the works. And it's all public. You could see them working on exchanges on their Trello board, which is really cool. But if you click how to buy here, oh, this is an actual how-to on how to buy Apollo. Here we go. Trade on Uniswap, and then you could buy on Bitmart, LBank, and XT right now. But again, word is that potentially some larger exchanges are looming. So we shall see. And again, they completely ditched the Inu from their name. They got rid of it completely. It is now just Apollo Crypto. That's a brand new logo. This is a real deal project. And, I said that from day one, even with the Inu in its name. I was very confident in that because I had a chance to, meet Matt Johnson and the team personally. And I was, very, very impressed. And that's why I was a day one investor. And there's also, I think Your Pop is doing, I believe Your Pop's doing a AMA tonight. Let me see. He is. Let me see. I'm pretty sure he's doing an AMA tonight. Let's see. I'm almost positive. Let me go to his Twitter here. Hold on. I'm pretty sure he tweeted that out yesterday, didn't he? I totally disagree. But that's okay. You're entitled to your own opinion. It's been the most profitable project I've ever been a part of for me personally. So it's been a blessing for me. But you're entitled to your own opinion. If you think it's crap, then that's your opinion. Let's see here. Here it is. All right, so 8:30 p.m. Central. So 9:30 tonight. 9:30 tonight. So let's see. Is that let's see. Yeah, in 10 hours. 9:30 tonight Eastern, 8:30 Central. He's hanging out with Matt Johnson from Apollo. And it's not Apollo Inu anymore. It's Apollo Crypto DAO is their Twitter. Ecosystem is growing. Token is up 350% in the past 7 days. Actually, I think it's more than that now. It was up 450% at one time. There you go. 368% in the last week. 31% today. So there you go. Interesting. So let's see what else we got. What else did I want to get into? Oh, BTFA. BTFA was green today too for a little while. They've got 7,000 of their NFTs minted out of the 10,000, which is pretty good in a bear market, in my opinion. Really good in a bear market. I bought my Apollo through Uniswap. I have all mine on the decentralized side of things. You can make profits from crap. I mean, okay. If you think it's crap, then that's your opinion, man. That's okay. You like Terra, though. Okay, that's cool. Everybody has an opinion, right? That's okay. Volt Inu, tools. Hopefully Streamer gets the Inu out of their name as well. I agree. I think Streamer should. I mean, because they're building something similar. I agree. I think Streamer should just be Streamer United because that's their LLC, Streamer United. I agree. They should just ditch that out of there. They had a great launch, a great run up, and they're kind of just hanging out now in this bear market. I mean, they're still holding strong, holding pretty strong and steady. They're still up from its launch price, right? Kind of consolidating here a little bit where it did before. But I agree. I think they should get rid of that name too. This is a much smaller project, only $3.74 million market cap. But they partnered with Def Jam. Streamer did, which was big. Any recommendation on Algo? Let's see. Let's see if there's any news on Algo. I was looking at SHIB here. Speaking of SHIB, real quick, this 50-day moving average is big for SHIB. If we can get above that, this rally could continue. But let's take a look at. I really like Algorand, by the way. Shiba United sounds good too. Streamer United. It would be Streamer United. Or are you just being facetious with Shiba? No, I've not bought Terra Classic. Well, I bought Terra Classic before it collapsed. Put $2,400 in it, and that's worth like 30 cents now. But I have not bought it since. No, And I don't plan on it. I don't plan on buying that or Terra 2.0. It's just not for me for right now. I mean, I just think there's so much risk associated with investing in anything that Quan's a part of right now. So, and there's so many other opportunities out there. There are so many other cryptos that I want to accumulate more of. So it doesn't look like there's anything breaking in terms of Algorand. We can sort by date here. Let's see. Algorand resumes. Oh, here we go. Techstars partners with Algorand to drive Web3 innovation in Boston. Algorand has been spoken very highly of from a lot of people in crypto, including Charles Hoskinson. Here's one day ago. Algorand survives with its technical and strategic partnerships. They're also a partner of, they are sponsored for the World Cup too. So, but I like Algorand. Baby Doge is fascinating. I haven't covered a lot of it, Soto, but it's hung in there pretty well, especially in a bull market or bear market. No problem, man. I mean, it's out. Sorry for losing on the Terra thing. Yeah, I mean, it is what it is, man. I think it sucks, but I mean, there are people who I feel way worse for that lost millions and millions of dollars, right? Who had money in Terra and UST. So, I mean, it's always terrible to lose money, but it happens in crypto. It's part of the process. If you're not ready to lose some money in crypto, don't get in. Don't get in. Hey, Zach, what do you think of Baby Doge? Okay, got that. If Luna Classic gets to that 1.2% tax implemented soon, Classic could hit $1 in 8 months, in my opinion, of course. I hear you. And that's cool. I mean, I hope it does. I hope people kill it, crush it. I do. XRP was one of the first cryptos I heard about over a year ago. I still haven't been able to get any. If you're in the United States, you can get it on Uphold. And there's another one, too. Is it Kraken? Wait, where can you get XRP in the US? It's no, Uphold is one. That's where I have a little bit. I have a little bit of XRP. That's where I have it. Where to buy XRP in the USA? Somebody else will know in here. Where else can you buy XRP? Zach, you didn't get airdrop new Luna tokens? I thought all the users affected were. No, I was. I think I quickly turned it into like Bitcoin or something like that. In your opinion, what are the best 3 cryptos to hold? Safest bets for me are Bitcoin, Ethereum, and Cardano. Safest bets. But I mean, there's others that I think have much higher upside. Like, I think Cardano has a lot more upside than Ethereum does in the next, 5 to 10 years, just because it's newer. But I still hold more Ethereum because it's a safer bet, in my opinion. Daniel says you just get it directly on the ledger. XRP. Mr. Dino says you can mine it. VeChain and Kronos will be the talk of 2023. I like both of those. Own both of those. I want to accumulate more VeChain, and I will very, very soon. Where is VeChain today? Is it still at 2 cents? I've been watching it every day now. I'm really hoping it gets down to 1 cent. Just hasn't got down there yet. Almost did right there. If it gets down below 2 cents, that's going to be a really good opportunity. But even here at 2 cents, I think it's a really good If you're playing the long game on VeChain, it's been as high as 25 cents. I mean, you're looking at a 13x right there, 13.5x. If it gets down to 1 cent, you're looking at a 25x just for it to get back to the all-time high. Right? So and then let's close out the stream with Clear Cryptos a little bit. There's been a lot of people talking about it, and that's fine. Everybody has their opinion on it. But I just want to say this, real quick. A lot of people who are talking about it know nothing about it. And you can have your own opinion about every creator out there, and you can listen to whoever you want to listen to. But I just want to end it with this. Okay? And take this for what you will. I've spoke directly, met the people who are operating Clear Cryptos, many of the people, not just one person. Okay. My judgment has been that this is a fantastic project. This is not just another flash in the pan Inu. And quite frankly, early on in my YouTube days, I did cover a lot of projects that were run-of-the-mill projects. NFTs here, doing a swap, but I was learning. I was learning the process, right? I always say I don't have it all figured out. I'm relatively new to crypto. Me as a person, me as a creator, me as a crypto investor, I'm transitioning away from these sort of plays, right? Focusing in on blue chips like Shiba Inu, like Crow, like Gala, like Cardano, like talking about, Jerome Powell and the Feds. So I'm slowly but surely growing and evolving as a person, as a creator, as a crypto investor. And this project, to me, it feels like getting in Cardano ground level. And you might say whatever you're going to say about that. You think I'm crazy. But here's the one thing I have. I have time spent with the people running and operating the project. A lot of time. And that's my judgment so far. So take that for what you will. Listen to whoever you want to listen to. Have a great day, and I'll see you on the other side.